video blog is all about understanding the funds, net assets, functions, and sub-funds and how they interact. Now the idea is that this is a short recap of each of these four topics that we've already covered all of the four topics, but how do they interact? And there's a little bit of confusion in the feedback I'm getting from the people who are following these video blogs, a little bit of confusion over what each of these things are and what they mean. So in one sense, everything we covered with this blog is old stuff, but just one more time let's talk about it just to make sure that we are clear. Okay, the first thing we want to be clear on is what is a fund. We've said it many times already, but a fund is a self-balancing set of accounts. So you can see here the operating fund balancing, okay, with its own assets, its own liabilities, its own net assets. It will have its own statement of changes in net assets, its own operating statement, and so this is the operating fund, a self-balancing set of accounts, and this is the planned fund. And so almost every organization needs to have both of these, and at least both of these. And the best way to think of them are the different branches of the store of a business, branch stores, and they are used in the place where the assets and liabilities have to be kept separate for each of the different funds. Okay, so that's what a fund is. And now every fund has its own net assets. The net assets are the ownership, so to speak, of the fund. In business terms, this would be called the capital section or the equity section of the balance sheet. And this is called net assets in the nonprofit environment because you have total assets minus the liabilities equaling the net assets down here at the bottom. And these net assets, since it's a nonprofit and it's not an ownership type of situation, we don't really call it capital because there's nobody who owns it. But so this is net assets. So every fund has its net assets. And then we further break down the net assets in the Adventist world with functions. Okay, so every fund has its net assets, and the subparts of the parts of the net assets are in the Adventist world called functions. Okay, and then to add one little bit more confusion, in the accounting manual has created this concept of sub-funds. It doesn't really exist hardly any other place I know of but in the minds of the accounting manual folks. And the sub-funds is that the planned fund really consists of two separate funds. There is the expendable portion. Okay, this is the money that can be spent on net assets. And so here you can see the $1245,890, and then there's a $2,000 liability against that. And so the net assets of the unexpended portion is $1243,890. And then we have the expended portion, the investment in plant. This is the $4975,856 minus the non-current loan of $1,000 is the $3975,856 in this example. And so really there's two sets of self-balancing sets of accounts here. Now, there's several reasons that we can get confused, and let me just go over those with you. First off, the use of the word fund is very overworked in most nonprofit environments, including the Seventh-day Adventist Church. We talk about money that is invested into retirement funds as if they're real cash, and then we talk about funds in the accounting sense of the operating fund or the planned fund, and it gets to be a little bit confusing. In old-timey, we would have funds down here in net assets, which were substantially different than the retirement funds being assets up in the asset section of the balance sheet. And so to sort of simplify this, in the Adventist world now, we are not calling net assets funds. We're calling them functions. So if you're a little bit confused between what's a fund and a function, it's an honest confusion, because in the olden days we called these functions down here funds, but it was really a misnomer or confusing, because they weren't really money down here that could be spent like a retirement fund. So what we've started doing in the Adventist world is that we call these little subsets, these divisions of net assets, we call them functions. So the only place in the accounting world that fund is properly used is in the environment of a self-balancing set of accounts. The net assets of the self-balancing set of accounts are the net assets, and we divide the net assets into functions. You can see the interaction there. So we want to be careful about misusing the term fund. Accountants should only use it in the context of a self-balancing set of accounts and never refer to net assets as funds. And it's an honest mistake. I occasionally will accidentally say something like unallocated tithe fund or allocated funds, or but that is incorrect. We are going to call these claims down in the net assets functions and not funds. Okay? And these and the second part of the confusion happens over here in the planned fund. Okay, we have a sub-fund that in our training videos have been called the unexpended plant fund. All right, when we are referring to that self-balancing set of accounts, we're talking about the asset, the liability for the unexpended portion, and the function of the unexpended portion. Okay, and so we have an unexpended plant fund, sub-fund, built into this plant fund, and we have the invested in plant fund built into here as a sub-fund. Well, to keep it separate, keep these two parts sort of separate after we have combined them into one fund, we call the portion of the plant fund that belongs to the unexpended portion of the plant fund that belongs to unexpended plant, we call that the unexpended plant function. So there's such a thing as an unexpended plant fund, and there's such thing as an unexpended plant function. The unexpended plant fund is this self-balancing set of accounts, and its net assets are called unexpended plant function. So it's a pretty confounding. So if you're talking about the self-balancing set of accounts, you'd call, if you're talking about the assets and the liabilities and the equity that belongs to the unexpended plant subfund, you would refer to the unexpended plant subfund. But if you're talking about the net assets that belong to that subfund, you would call it the unexpended plant function. Pretty wild, huh? Okay, the third area where there's a little bit of confusion is in the singular and plural use of the word function in the Sunplus world. So we have the assets, and then these assets, some of them are destined to be used to pay off liabilities, and then the claims against what's left over are down here in functions. And so $3,041,556 is claimed by the unallocated tithe function. 3462,935 is claimed by the non-tithe, unallocated non-tithe function, and all of the allocated functions are claiming 77,98,929. But behind these numbers in the Sun Plus world, we keep greater detail, and so we will talk about debiting the function that the specific function that would add up to make up some of these numbers. For example, we will say debit the function, and we'll debit Sabbath school, or debit presidential, or debit treasury, or debit the accounting department as the function that ends up adding up to be an unallocated tithe function or unallocated non-tithe. It's a little bit kooky. All right, so don't let the plural and singular throw you off, okay? That the functions in the Sun Plus world add up sometimes to be a plural. All those functions add up to be a function when it appears here on the balance sheet. It's small confusion, but just a little bit awkward when we start looking at the accounting system versus what shows up here on the financial statements. So I hope this helps you, and a little bit keeping this straight. Now, accompanying this video is a sort of a written document that describes what I just told you, and it includes in this written document, there is a table that I want to draw your attention to, but I don't want to actually spend a lot of time with it. And this goes over the accounts that belong to the unexpended plant fund and the accounts that belong to the invested in plant fund. Okay, so normally, well, let me spend just a minute with it just to help you work through it. Normally, all cash, this is everything I say here is normally all cash and investments and receivable accounts all belong to the unexpended plant subfund. You would never see it in the invested in plant. Okay, all fixed asset accounts belong to the invested in plant fund. Okay, all short-term liabilities, in fact all liabilities except for mortgages, belong to the unexpended plant fund, and all of your mortgages belong to the invested in plant fund. Okay, and the net assets, the unexpended in plant function belongs to the unexpended plant fund, and the invested in plant fund, invested in plant function is the net asset. Revenue. All revenue accounts in the plant fund belong to the unexpended plant function. In particular, certain revenue accounts that are only used, there are certain revenue accounts that are only used by the unexpended plant fund. Okay, addition to unexpended plant assets, insurance proceeds, proceeds from sale of plant assets, PSPA, proceeds from sale of plant assets equipment is an example of that, proceeds from loans, and other additions to unexpended plant assets. Those accounts are only used in the entire chart of accounts. These accounts are only used by the unexpended plant fund. They're not used by the operating fund, and they're not used by the investment in plant fund. On the other hand, in the investment in plant, no revenue accounts are used by the investment in plant except for these accounts here: additions to investment in plant assets, donated plant assets, value of plant assets purchased, school and church and school properties added, loan principal reductions, and other additions and investments in plant assets. Those belong to only and are only used by the investment in plant fund. And then in expenses, okay, plant funds rarely use expense accounts. All right, in particular, your repair expense, insurance expense, and property tax expense are all operating expenses of the operating fund and not expenses of the plant fund. Okay, but these accounts belong to and are only used by the unexpended plant function. Okay, deductions from unexpended plant assets, acquisition payments, mortgage loan principal payments, and other deductions from unexpended plant function. These 96s here all belong to the unexpended plant function. Okay, fund, unexpended plant fund. Okay, and then these over here all belong to the invested in plant fund. Depreciation expense, deductions from investment in plant, new loans obtained, net value, this is new mortgage loans, okay, net value of plant assets sold, and other deductions from investment in plant assets. The 97s, the depreciation expense and the 97s belong exclusively to the invested in plant fund. Okay, you can study these out or print them and save them in your desk as a sort of a reference guide to when and only when these are used. And so, to reiterate, these accounts that are specifically listed here are only used by the unexpended, and the accounts that are listed here are only used by the invested in plant fund, and they're not used by the operating fund at all, ever. Okay, so there. So I hope this is helpful, and I'll look forward to hearing your feedback on this. Make sure you download the document that accompanies this video and have it there for your reference if you need it. So thank you, and thank you for supporting the Sun Plus World.